We have another important fund manager also who's waiting by. Manish Gunwani, the CIO, Equity Investments at Reliance Nippon Life AMC, joins us now. Manish, in your case, actually, our cameraman had to brave the rains to get over there, and hence the delay. Thank you anyways. The markets are still in a funk. Today, 5 stocks in the red, almost 4.5 stocks in the red for 1 in the green. What's troubling the market? Is it the coming earnings season?
No, I think there's obviously some short-term worry in terms of the supply, because that guideline of 75 to 65, although it's at a consultation stage right now, plus the divestment supply, I think if you combine the two, then in the short term, as a knee-jerk reaction, obviously, I guess that's the biggest worry for the market.
Manish, let me interrupt you here for a minute.
Because
the DEA secretary told us rather emphatically that this is at very much a proposal stage. And even in the past, when we were enforcing 25, we took our time about it, didn't we? I mean, enough deadline extensions were given. Is that only the bother? Because the way in which the stocks are moving, there seem to be other worries. Like you said, public sector disinvestment is definitely more a worry because they have given a big divestment number. But would you place so much emphasis on this minimum public shareholding, or is it other consumption worries, earnings worries?
The point is that while it's at consultation stage, but assuming it takes 2 or 3 years, it still is a very large amount, almost 4 lakh crores. Now, that amount, if you annualize and you add the disinvestment supply, clearly in the short term, I mean, obviously in the long term, what will matter is earnings and fundamentals. But I think at the margin, since we also saw a bit of a run-up, not a very broad one, but a slight run-up to the budget. And that, I think, is one. 2, I think, is some of the thought process was also about getting a very explicit fiscal stimulus, given that the economy is growing below trend. So I think what's happening is it's working out that the main stimulus probably coming out from the monetary side rather than the fiscal side. And clearly there is a more unanimous opinion about monetary policy being relaxed to provide the stimulus. But there was some thought process that even the fiscal should be relaxed. And I guess when you look at the growth data for last 2-3 months, obviously it's been pretty slow, and people were hoping for a more direct fiscal stimulus. So obviously there are items like PSU bank recapitalization which will help growth, but I guess some part of the market was expecting a more explicit fiscal stimulus which hasn't come through.
Okay.
So Manish, good morning. So in that case, does that put the recent market rally at risk for a bigger correction, especially considering that this quarter's earnings season, I mean, it's likely to be a bit of a washout where even top line growth might be a bit of an issue?
Yeah, I guess we'll move to the fundamentals, because what's also happening with the budget, if you see over the long term, is one is over the last 15-20 years, the role of states in spending has gone up. 2 is with GST. A big part of the budget used to be around the indirect taxes. Now, clearly from a structural perspective, that part has got taken out of the budget in a sense through GST. So I think the budget is not so much about numbers anymore. I think it's about the vision and direction. And I think while it may look like a very placid budget in that sense, I think there is a very interesting thought process between the economic survey and the budget about changing direction from a consumption-oriented economy to a more East Asian model. Of course, it's not a very explicit, blown-out direction change, but there is a thought process wherein you're opening the doors for government debt, using foreign capital, you're trying to promote exports, you're trying to promote clusters for manufacturing. I think that's the more important key takeaway, but that's a bit like a 5-10 year game. It's not going to manifest itself very soon. So you're correct that I think we will kind of get over the budget in a couple of days and move towards earnings. And as far as that part is concerned, clearly we have segments which are looking very promising. The corporate banks, cement seem okay. Now, clearly some of the discretionary consumption components like autos have slowed down much more than what people thought maybe 6 months to 1 year back. But I am hopeful that as the monetary stimulus plays out, while we may have debate about transmission, etc., but clearly if inflation remains around where we are today, what we're going to probably see a material drop in interest rates even going forward. We've already seen a fair amount on the gilt yields, but as it flows down to the economy over time, I think there is a good chance that the economy will revive maybe in a couple of quarters.
Okay, well actually your competitor Naren was on the show just a few minutes back. I don't know if you heard him. He was betting on debt. He says credit has been beaten down a lot, and then of course there is a very clear path of rate cuts. Would you say debt will do better than equity?
So I think it's more about sequencing. I do agree that without debt doing well, it's unlikely that equities will do well, because, as I said, the lever of stimulus seems to be monetary policy at this point of time, and clearly you're not going to get growth with the kind of liquidity you have in NBFCs and SMEs and all that. So clearly it's a kind of mandatory thing that debt starts doing well before equities does well. Now that on relative returns, does that mean that debt will do better than equity? I think the jury is still out, because the issue with going right on gilt yields is that even if you go right, there's a certain return you can make, maybe high single digits to low double digits. And if we are lucky in terms of a bit of growth revival plus global conditions being kind of Goldilocks with soft crude prices, dollar weakening and all that, I think equities can do better than debt. But I do think that debt is a great asset class by itself.
Okay.
Sure. We will have to thank you on that note. We have a market that is, very extremely troubled at this point in time, and we want to see if the technical guys can help with a bit of short trades. Thank you very much indeed for joining us, braving the rains, and speaking to us about your views on the budget and the move hereafter. Yes, debt again, as Manish says, perhaps could be endorsed, but he still thinks that there are pockets in equities, especially in investment oriented areas rather than consumption.
Just a word. We'll try to get some experts on that. There's an opinion from PwC that the increase in surcharge will result in increase in capital gains tax as well for for FIIs which are not set up as corporate entities, for non-corporate entities. So funds established as trusts. That will affect the surcharge. So the effective tax rate will go up from 11.96 to 14.25% for long-term gains, and from 17.94 to 21.37 for short-term. That perhaps, and on derivatives, it of course goes up to 42.7%. That the maximum rate. So that's perhaps one reason that you've seen so much pressure on the FII favorite names as well in today's trade, especially the HDFC twins.
No, I mean, I don't know whether people would quit and go because of that, but it's certainly a burden.
It's a
we become on the margin less attractive than another market.
Exactly. But anyway, Ashwani Gujral, Mitesh Thakkar and Prakash Kava now join us. Good morning again. Ashwani, you made this point even that the gap down perhaps was also an opportunity to sell. Now we are at the low point, especially on the bank nifty. Any temptation to cover shorts here, or do you want to let them run as a trend day?
See, I have already covered my shorts and taken long positions because we expected 50-point gap down. We actually got a 120 point gap down. So right now given the conversations you are having, everybody is depressed, and I would think that you could get back to 11,750 before resuming the fall. Today was a kind of a sideways day, so down is done. Chances are from here we could move up if we don't get any more interpretations on tax. So the sense is that get long here and play for a bit of a pullback, and possibly the short trade will come back sometime later on. What is moving back higher is the IT stocks, which really have gotten a hammering, and now that these halo stocks are also lower, so we have a cushion of a 40-50 point pullback. Having said that, individual stocks, HDFC Bank is a sell with a stop of 2460, target of 2400. ICICI Bank is a sell with a stop of 436, target of 420. And Apollo Hospital is a buy with a stop of 1300, target of 1365. Like on Friday, things were going down on the IT space. Today, IT may recover and banks may be down a bit. So that way, some support is now visible. And I would think that from here, light pullback can happen.
Oh, okay. Any specific stocks, Ashwini?
I just gave
Okay,
you.
yeah, no, I meant any other.
Okay. See, basically, the buyback news, I don't think disturbs IT stocks to a large extent. So this is a time for people who love IT, etc., to build up some positions.
Fair enough. Mitesh, how do you approach today? Ashwin is saying that short trade is done and now he's in fact long. Your thoughts on the index and your stock calls?
No, I think we might take a breather around this 11,670, 650 zone, but I don't think that the time has come to explore long positions. I still believe that there's a fair chance of us breaking down, though we have fallen on budget day and today. So I think we might spend a few hours kind of trying to hang on to this level, but for the timing, the indicator setup is still negative. So I would be more prone to trade on the short side. Given that kind of a scenario, I think I have two sell calls. In fact, both of them on the Bajaj Twins. Intraday charts are showing from overbought levels they could correct a bit. So Bajaj Finserv is a sell with a stop at 84.30 for targets of 81.50, and Bajaj Finance is a sell on a break of 36.70, 65 in cash levels. Then sell with a stop at 37.10 and look for 3600 as your first target.
Anuj, तुम्हारा नजर तो नहीं लग गया? You said B2H2 and look, the two B2 stocks are Ashwini, are Mitesh's sell, and one of the H stocks, HDFC Bank, is Ashwini's sell. Yeah. Prakash Gawa has also joined us. Good morning, Prakash. What are you trading?
Good morning. I think it's weak to me. We might see a bounce. A bounce could be sold into two stocks, both on the short side. Ambuja Cement looks like more of a sell here. More of an exhaustion. The reaction got over on Friday. Perhaps we can see a slide to around 200 zones. Stop above 209. L&T is looking weak to me. I think it's heading down to levels closer to 1450, and I don't think it's stopping there. Perhaps going down further down. Stop above 1550 on L&T should be fine.
Okay. Ashwini, this Yes Bank rally today, how much would you give it? Any trades here?
See, these rallies have happened earlier and nothing has come out of them. Just kind of short covering. I don't think Yes Bank will cross 100 easily now.
Okay, we'll wait and see. There are some announcements bashing up some unnecessary speculation, and maybe that's helped the stock for the moment, but let's wait and see how things pan out. We're taking a quick break.